traders, happy Monday. Julius the Kampenaar here from Amsterdam. I hope you all had a great holiday week, at least a holiday weekend with the 4th of July, and most people taking the day off on Friday. Markets were open, and as you know, the TA team had the week off last week, so it's been like a week and a half since we spoke. There's good news and bad news. The bad news is on the personal side. I'm refurbishing my office, and that's turning into a bit of a disaster because we ran into a ton of constructional errors that we have to fix. And while I was doing that work, I'm doing a lot of that work myself, the analogy with what's happening in the markets popped up in my mind. Because what you see in the markets right now, and I've got the RRG for the sectors up, and we'll take a look at another RRG in a minute. But if you look at the RRG of the sector, you see that like everything is in the red, is in the lagging quadrant, or at least on red trend bars. Only technology is really strong, pushing into the leading quadrant at a strong heading. Utilities is still there, but it's rolling over. It's losing relative momentum. And then we've got communication services right here, which is starting to pick up. So mildly positive, I'm going to say. But it's pretty clear that this market is now carried by technology stocks. That is one of the things that I was thinking about when I was doing all this construction and digging out foundations and running into cracks in your foundation and people ripping out old structural walls that were not properly fixed, causing like everything to start shaking and doing. And the comparison with the markets is striking. You know, you can have a faulty foundation with cracks, and if you look at it, you think like, oh my God, this is gonna fall over in a minute. But in reality, it doesn't. You know, it's still there. The house is still standing. There's some cracks. There's some walls that are a little bit shaky, like floors that have a little bit of, you know, they're not level anymore. And if you bring that to the markets, then the market is still there. The house is still standing. The S&P is moving higher. Nasdaq's moving higher. In general, markets have not, you know, literally crashed, and I don't think that will happen, at least not overnight. The foundation is narrow, and that keeps me on my toes. It keeps me alert because I know that, you know, there's a risk. There's an inherent risk, but you never know when it's going to come. Just like the house, there's cracks in the foundations, bearing walls that are not properly constructed are a risk, but will that wall come down tomorrow, or will that wall come down in 5 years? Or maybe never. I'm hoping never, because we're going to do the reconstruction work to make sure that it doesn't come down. And if you bring that to the markets, then maybe there is reconstruction work going on to fix that narrow foundation. Or maybe, you know, the market will have to come down. We will have to wait and see. But if you look at the sector rotation, technology is the leading sector still, followed by probably utilities and to a lesser degree communication services. Both not super big. Well, communication services decent. Utilities is a small sector. Communication services is a decent sector. But that's it in terms of market capitalization that's carrying this market. So yes, the foundation is narrow, but the foundation so far has been proven to be very strong, even though it's only a handful of stocks. And as long as that's the case, we'll just have to ride this out and sit still with a little bit of caution in the back that the risk is always there, and the risk is probably a little bit bigger than when you would have seen a very broad-based market participation, which is not the case right now. Anyway, I don't want to give a super negative view, because that's not my view. It's still a cautious, careful view based on the observation that the market is carried only by technology, to a lesser degree communication services, and a little bit of utilities. And you see consumer discretionary picking up and you see real estate picking up. But these are sectors that are at very low RS ratio levels, and it will take a lot of work and a lot of performance before they actually move all the way over to the leading quadrant. We will see that on the RRGs most definitely before that happens. And the second RRG that I want to share with you is the one that shows the rotation for international stock market indices. And as you can see, a lot of rotation is taking place towards or into the lagging quadrant, and at negative headings. There's only a few markets that are on a positive heading, and that's right here. It's the Nifty in India, and it is the Kospi in Korea. Not the markets that a lot of traders are, well, there are a lot of traders, but probably not in our audience. In our audience, we're looking at the S&P, the Nasdaq, and maybe the New York FANG. Here's the Hang Seng Index rolling over after a very strong stint. But I hope you agree with me that the majority of these tails is pointing into a southwestern direction between 180 and 270 degrees. That is not what you really want to see. You want to see what's happening here with the S&P, with the Nasdaq, and with the New York FANG Index. By the way, the center, the benchmark here is the MSCI World Index. What this means is that the rally in the MSCI World Index, because here's the MSCI World Index, that's a very strong image, very strong picture, pushing to new highs, really strong chart. But if you look at the RRG, again, just like the US market, if you look at US sectors, the MSCI World is driven by pretty much only US stocks. And there is obviously an overlap here because the New York FANG is inside the NDX and the NDX probably all inside the S&P 500. But what struck me when I was looking at this chart last week is that the further you go to the right, so the stronger the tails are getting, the smaller the index. The New York FANG is only 10 stocks. The Nasdaq's 100. The S&P is 500. So talking about a narrow base, this is also getting a narrower base. And that is driving the MSCI World higher. What you can also see here is that the RSI is not picking up. So this is potentially a negative divergence forming. We're not there yet because there's no peak in here. So if this rally continues, we will sort of negate this potential negative divergence, and it will never occur. But you've got to keep in mind that as soon as you see some sort of a rollover in the price of the MSCI World Index, and you see a peak in the RSI and it's lower than the previous peak, that's something that you need to pay attention to. Again, probably won't happen overnight. Chart itself is looking good, but here also the foundation of that rally for the world stock market index is becoming narrower and narrower and narrower. That's the message that I want to share with you for this week. Obviously, we'll dive further into that this Wednesday when I do the SIS report together with Todd for our members. And let's see what we find then. But the basic message, the basic takeaway is markets still holding up. Trends are still there. The foundation is narrow, but the foundation is strong. And we'll have to wait and see whether the market can fix itself, whether the market can broaden that foundation and give that mark the needed broader base to give us a sustained rally with less risk. Thanks for watching. I hope to see you on Wednesday, and otherwise I'll see you next week, same time, same place.
Hi, it's Todd from tradinganalysis.com. Thanks so much for watching. Listen, my team and I have so much to share with you in terms of our technical analysis, our fundamental analysis, portfolio management tactics, trading in and out, maybe options, sector rotation. Let us know what's most interesting to you. Maybe drop that in the comments section and we'll do our best to work it in. Also, consider clicking the subscribe button and the bell icon to be notified when we put out new videos. And finally, you can check us out at tradinganalysis.com if you'd like to see us manage our real portfolios in real time. Thanks again for watching.